Welcome to the What Bitcoin Did podcast.
Hello there from San Francisco. How are you all? Bitcoin over 11,000, so I think we're all happy. We're finally out of the bear market. Anyway, welcome to the What Bitcoin Did podcast, which is brought to you by Kraken. And today I've got a fascinating interview with Brian Quintenz from the CFTC. But before that, I got a message from my show sponsors. So first up, Kraken, the best exchange in the world for buying and selling digital assets, and the only place I use for buying and selling Bitcoin now. Not just because they're a sponsor, but for everything they do to create the best exchange in the world, and for everything they do to support the industry, from everything Jesse does to all the things they're doing related to security, such as Kraken Security Labs. Amazing stuff. They are the only regulated spot and futures crypto exchange, and with all the exchange hacks happening, who you're going to trust to buy and sell your Bitcoin and crypto from? For me, it is Kraken. So join me in supporting them, the best exchange in the world, by heading over to kraken.com, which is kraken.com. That is kraken.com, which is kraken.com. And next up is BlockFi. If you're a regular listener, you definitely know these by now. They've been supporting the podcast since August last year. We're coming up to a whole year of supporting the work I do. So a massive thanks to Zach and the team out there. I'm going to be catching up with Zach later today here in San Francisco, finding out what's coming up for BlockFi. But they are creating the future of Bitcoin and financial services, and they've currently got two amazing products in the market. They have their crypto-backed loans, where you can use your crypto to get USD without selling, and they support Bitcoin, Litecoin, and Ether. And they also have their crypto interest accounts, which I use. I've got my third payment coming soon, which is super exciting. And this product supports Bitcoin, ETH, and Gemini's GUSD. BlockFi also offers GUSD as a USD loan funding option, and as collateral for institutional crypto borrowers. So if you're interested in trying any of these out, if you want to find out more about BlockFi, head over to blockfi.com, which is blockfi.com. That is blockfi.com, which is blockfi.com. Okay, so on to my interview with Brian, who I first met recently at the Coin Center dinner in New York. And following my interview with Hester Peirce at the SEC, I asked Brian if he would also like to come on the podcast. He said yes. So when I booked this trip, I added in a flight into Washington, was in and out in the day. I headed over to the CFTC to record this interview with him. Brian is one of the commissioners at the CFTC who have a very important role in regulating aspects of Bitcoin and cryptocurrencies. I know regulations are scary. They are for me and for any libertarian or crypto-minded person. But with this interview and my previous interview with Hester Peirce, they've kind of made me reconsider regulations and the US government's potential agenda. Brian seems very open-minded towards Bitcoin, and he said he supports a robust, pro-innovation, do-no-harm posture. So regulations are really, they're a reality, but it's nice to see that we have this kind of pro-innovation from these different government departments. So we ended up discussing a whole range of things, from how Brian became a commissioner to the history of the CFTC and futures contracts. We also discussed self versus formal regulation of exchanges, Facebook's Libra coin, and we even managed to squeeze in a little bit about privacy coins. And also, when I was there, I'm not sure if you saw the picture that went up on Twitter, but I was lucky enough to meet with CFTC Chairman Christopher Giancarlo while I was there, and he has also agreed to come on the podcast. So his term ends in a few weeks, and I've agreed with him. After that, I'm going to head out to Washington, meet up with him, and also get him on the podcast as well. So thanks for that, Crypto Dad. Okay, I hope you enjoy this interview as much as I did. And just a couple of other things. I'm in San Francisco now. I'm here for Bitcoin 2019, which starts tomorrow, which is very exciting. If you're there, if you want to come say hello, please do. Come and give me a shout. And over the last few days, I've been in Boston, I've been in Washington and Florida. I've recorded a bunch of interviews. I was with Taj and Nihar at MIT, as well as Charlie Shrem in Florida. And I'm going to be recording a bunch more over the next few days. I'm going to be heading to LA after this, Boulder, Chicago, and then back home. Okay, listen, if you enjoy the podcast, you want to support what I do, please head over to my website. It's whatbitcoindid.com. Click on the support section. It will tell you everything you can do. And if you want to get in touch, if you want to reach out to me, my email address is hello@whatbitcoindid.com. So I did 20 years in advertising, and have you ever watched Mad Men?
Yes.
Yeah, so I love Mad Men. I love old school creative, beautiful art direction, great copy. And that was taken out of the industry, and it became very much programmatic and all about the data. And then the data became quite sinister, and I had enough. So I ended up writing a kind of manifesto called Online Advertising Doesn't Work, and quit the industry, and then had a year or two off, and then 2 years later I'm here at the CFTC.
The intersection of Mad Men and Jerry Maguire.
Yeah, it is. Yeah, it was that Jerry Maguire moment, actually, when
Yeah.
I did it. It was totally that we were conning ourselves and we were conning our clients, and I couldn't do that anymore. It didn't feel right, and so I ended up having to find something new to do. And
Well, isn't it amazing to have a job where you have motivation and enjoy thinking about it, regardless of what time of day it is or if it's a work day or not? I mean, it's a blessing.
Well, I was listening to Joe Rogan the other day, and he was saying some jobs shouldn't be called a job. This isn't like a job.
Yeah.
I mean, I've been to Boston for a couple of days. I'm now here with you. I'm going to go to Florida. The only sad thing is I have some time away from my kids, but
Yeah.
it's not like a job. I love doing this,
Yeah.
and I'm sure you love doing what you do.
I
can
feel
see
the
the
same
passion.
way about this. Yeah.
So we actually have something in common as well. So I read your opening statement to the nominee to the Commodity Future and Trading Commission.
Oh, when I was being considered as
Yeah.
a nominee on Capitol Hill?
Yes, so
Okay.
I read your nomination,
Yeah.
and you thanked all your family.
Yeah.
My son is also called Connor.
Oh, really?
Yeah,
Oh, fantastic.
But-
How old is he?
he's 15.
Okay, my son's 12.
Okay, oh,
Yeah.
teenagers coming.
Yes, it's sprouting. you
Yeah.
know?
So you think it's teenage at 12 because it's changed, and then the day 13 hits, everything changes. So be
Okay.
prepared.
Well, luckily I have a 10-year-old daughter, so I'll just focus on her for 2 more years.
I've
and
got a
then-
9-year-old daughter.
No kidding.
But my Connor's spelled differently. See, it's here. It's with a single N.
Oh, really?
Because the American spelling's 2 N's.
Yeah.
My father's Irish. He lives in Donegal, so the original Irish spelling's 1 N. So yeah.
Well, I'm not Irish. I'm German and Norwegian, but Connor was just a name that we liked. So
But you've always lived in America.
I have. Yeah, my family is American. Our ancestors moved here in the middle 1800s. Actually, kind of right around the time of futures trading that started taking hold in Chicago in the Midwest.
Right.
In the middle 1850s, which is what the CFTC was founded to regulate. The Chicago Board of Trade was incorporated in 1848. It became chartered by the Illinois state government in the 1850s, and it got self-regulatory powers and started actually enforcing standards for the future delivery of commodities. And the CFTC was officially created in the 1970s, but there were prior iterations of it that were part of the Department of Agriculture since the 1920s.
So this is in your genes.
Yeah, I guess you could say that. Midwestern 1800s.
Yeah. Is that why you and Hester get on? Because you're both Buckeyes.
Of course. Anybody from Ohio likes each other.
Yeah.
I think Ohio is a home of everything great.
Well, when I interviewed Hester, I was dating a girl from Ohio.
Well, I think better of you already.
Yeah, I mean, she's amazing, great
Yeah.
person, and but she was like very much. She wanted me to go there for Thanksgiving because you have the big game. Is it against Michigan?
Yeah, the Ohio State football
Yeah.
game. Actually, I just took my son there. It was his first college football game, and
Oh,
I took
wow.
him back this last November for that. And it was in Columbus at the Horseshoe Stadium.
I think I prefer the college football now from the NFL.
Well, so I grew up in Columbus, and Columbus did not have a professional football team. Cleveland
Yeah.
in the north has a professional football team, and Cincinnati has a professional football team, but Columbus never did. So I was always partial to college football myself.
Have the Cleveland Browns got it back together yet? Because they're on a bad run, weren't they?
I mean, I guess you could still debate about whether or not it's a professional football team, but so I'm lucky to be able to cheer for the Buckeyes. But Hester says hi.
Okay.
I was with her yesterday. She wanted me to remind you that she's listening.
Right.
Crypto Mom wants you to watch your language.
I'm imagining like it's when I'm in the car with my dad. I have this filter I can switch off my swearing.
Yeah.
And so I'm going to do my very, very best. Don't you have to do your disclaimer?
I do. Yeah, so because we are an independent commission, and there are 5 of us, we operate on a majority basis. So therefore, nothing that I can say or nothing that I do say represents the commission itself. It only represents my views. The commission, again, acts on a majority basis, so I only represent my own views and not those of the other commissioners, the chairman, or the staff. So thank you for that reminder. Hester has to remind me to do that,
Yeah.
too. She's much more, she's the lawyer. I'm the markets guy. But,
You know what, though? Whilst she's very official and straight down the line, and she warns me repeatedly to stop swearing, she's also very approachable. I find very approachable. She, like yourself. And actually, I find it also, the disclaimers, I understand why you have to say it, but I like this ability that you have to come on a podcast and be open and share your personal opinions. I think that is a very progressive way to work.
Well, it is somewhat liberating that you can think about things outside of the box of having them have to represent an official policy position of a bigger agency. I think the chairman of our agency or of the SEC, whoever they are, may have different responsibilities there because they really do have the power of the staff to formulate opinions in some regards without the... But I view it as very liberating. I always try to confine my comments to our jurisdiction, and I try not to get into politics because I think we have a professional political class up on the Hill that does that every day and is very good at it. So I try to stay in my lane and think about what we do. But I love talking about it. I love thinking about it. I love hearing about it.
I think also similar with Hester and at the SEC, some of us here in our little Bitcoin bubble think that's all you think about. But you obviously do a lot of things outside of Bitcoin. But I'd be interested to know how much of your time is this taken up, and also is crypto? Are you seen as the crypto guy within the CFTC as amongst the commissioners? Or is it everybody kind of sharing information and knowledge, got equal interest?
Well, I think everybody does have an equal interest. I think, obviously, Chris has taken on a very prominent, Chris Giancarlo, our chairman, has taken on a very prominent role, given the reception to his testimony in front of the Senate, I think in late 2017 or early 2018, I can't remember the exact date, that really set a standard for how I think he would like the agency to view innovation and to be open to innovation, specifically around Bitcoin and the advancements and developments of new crypto assets. But I actually have the pleasure and honor of sponsoring a technology advisory working group at the Commission that has specifically looked at issues around Bitcoin, cryptocurrencies, DLT, in ways that they could challenge our regulatory structure, focus us to rethink how we approach certain regulations, or maybe even propose new ways of doing things to address challenges or to provide a better on-ramp for that innovation.
How was the journey for you? Because I obviously had a look back at your career. You started out, you left Duke as a, was it you mastered in policy?
Public policy.
Yeah, public policy. Then you were a policy advisor, but then you set up a fund, essentially, and then you've come back into, say, a government role. How has that journey been? Was it all a plan, or...?
No, it wasn't. It was fairly random, but I think, broad interests linked all of those areas. I've always had an interest in public policy, obviously, since I majored at it at Duke. College football and college basketball fan, and it was great to go there. At that point, they had one of the only, if not the only, undergraduate public policy majors in the country. So I was really attracted to that. And my goal was to get into policy work for the federal government. I worked for a member of Congress from Ohio for 6.5 years. And ultimately, I decided that I wanted to try something else that kept that view of policy relevant, but that also capitalized on my interest in financial markets, which, I was actually almost an undergraduate economics minor, but I didn't quite get enough classes. I didn't calculate that the right way. But so I always had an interest in economics. I always had an interest in markets. And there were times when I was on the Hill where I knew that the Congress was going to take a certain action, not because of inside information or because of my specific point of access, but because I knew the regulatory I knew the political landscape, I knew the legislative landscape, I knew how procedure operated. And I knew that an action was going to be taken or was very highly likely to be taken, and I saw the market completely miss that opportunity. So I was fascinated by asymmetries of information, regulatory arbitrage, political-based arbitrage investing, but I didn't have a background in finance, so I wanted to go get that. So I went to MBA school over at Georgetown, got an MBA, focused on finance, and was trying to pitch myself as kind of a political arbitrage, investment strategist to all of the big banks. That happened, unfortunately, to be right in 2008 during the financial crisis.
And do you know what? And that's when I bought my house.
Was it really?
Yeah.
Well, I bought my house then too.
Yeah.
But I
and
was
it dropped.
Well, I'm lucky I bought it here in DC, and DC was fairly immune to the market. But
Bedford wasn't where I am. London was immune, but where I am in Bedford is a small town north of London. It wasn't immune, and I think my house. I think it lost a third of its value within a year or two. It's back up.
Well. So you take the same approach to your house as you do to Bitcoin, right?
I'm reckless with everything.
I meant holding.
Yeah, I hold. Yeah, I hodled my house. Well, I didn't have a choice.
Right. But so it was. I got that experience, and I couldn't necessarily all the investment managers and banks that I was looking at weren't really interested in that. They weren't interested in creating a new opportunity. They were interested in streamlining their roles in certain spaces. But I was able to get this great job with an upstart hedge fund that had just started up in Maryland that was focused on the banking sector and investing in the banking sector during the financial crisis. And I learned how to evaluate the largest banks in the world from the ground up through an in-depth analysis of their financial disclosures, model them in Excel, and became, I thought, a really good predictor of their future earnings, capital levels, and potential valuations. And I decided to move on from that into more of a algorithmic trading strategy and form my own investment fund that was registered as a commodity pool with the CFTC.
Right.
Because I was investing in S&P 500 futures contracts, mini futures contracts. And right after I got that launched off the ground, I got a call for some folks on the Hill, some of whom I had known in my prior role, but were in positions of leadership, and said, "We've been following your career. You were a policy guy. We know that you know the policy. We know your political philosophy. Now you're a markets guy. We know you follow the banking sector. We have this opportunity that's open, and we'd like to consider you for it because we think it's a great combination of all those different sets of experiences." And I said, "Absolutely, it sounds amazing."
That was when Obama was still in power, right?
Right. That was actually in 2015. So the procedural dynamics of how these slots are chosen is somewhat complicated, but the independent agencies have commission structures. The commissions are bipartisan, which means that in a 5-member commission like ours, there are usually 2 Republican seats, 2 Democrat seats, and a chairman appointed by the president. So the president's party has a majority control. But in a situation where, as was the case then, a Republican seat on the commission opens up in a Democrat presidency, it is the Republican Senate leader that selects that candidate and forwards them on to the White House for the White House to nominate back to the Senate for consideration. So I was selected by Senate Majority Leader McConnell in 2015. I was vetted by the White House and nominated by Obama as a Republican commissioner in 2016. The election happened, and it kind of threw a bunch of nominations sideways, and I ended up having to be renominated by President Trump, for which I'm very grateful, and was able to finally get into the role in August of 2017.
Right.
So it was a 2.5-year process to get into the job, but
what an honor, though.
I do it all over again.
Yeah. So I guess you can't do this role if you're a libertarian or a independent. Has that ever happened? Must you be a Democrat or a Republican?
Well, so I say that it's a Democrat seat or a Republican seat, but what that really means is that it's up to the leader of the Democrats, if it's the president, or if the president's a Republican in the Senate, or vice versa, to select the nominee for that spot. And that nominee could be an independent or a libertarian.
Has it ever happened?
Well, I think, I'm not sure about this, but I think Jay Clayton is a registered independent.
Oh, really? Okay,
I
interesting.
believe so. I think so.
So your term, does it last until the next election?
So the terms are calendar dates set by law.
Okay.
And so the calendar end date for my term is actually next April of 2020.
Okay.
So I'm going to work as hard as I can until then, and then we'll see what happens.
And can you serve a second term?
That would be up to the White House if they
Okay.
decided to renominate me, and obviously it'd be up to me to consider that
Okay.
as well. But if I'm interested in that, hopefully it'd be a possibility.
Okay. Long term? Is there a political journey here? Could you become a senator?
You know,
If we get too far ahead of ourselves.
I don't know. I kind of like the appointed role.
Yeah.
So if you could get appointed to be, a politician, and I wouldn't mind that. I spent 6.5 years in Congress, and there was so much I liked about it. But being up for election is a grueling process, and I'm not sure I have the stomach for it.
Okay.
Even though I heavily believe in accountability, especially on the House of Representatives side, where they're up for election every 2 years, and there's kind of a continuous fundraising cycle. It's a grind, and I think
Right.
you really have to enjoy that aspect of public service in order to thrive in that environment. And I learned that I love the policy, but that side wasn't really my strength.
Right, okay.
So this is a good role.
This is a good role. Well, listen, we're here to talk about Bitcoin.
Yes, we are.
As well. So were you aware of Bitcoin before the role? How long have you known about kind of Bitcoin?
Well, so when I was in the financial markets at the hedge fund, I was reading my Bloomberg terminal news feed, and kept seeing it discussed, and kept hearing about the reemergence of the Winklevoss twins.
Yeah.
And their acceptance of that, and followed along with it. Never really took the opportunity to dabble in investing in it, reluctantly, and now I'm basically precluded from doing
Yeah.
so. But I'd always been fascinated by it. That a 10-page, 11-page white paper could be the basis for forming, in my view, what is I think the first, instantaneously purchasable, globally accessible commodity. I don't know anything else that has that characteristic,
Yeah.
and I think it's fascinating. I think it's absolutely fascinating.
It's a rabbit hole you go down
Yeah.
of education, and I think
That's
you
true.
go in levels as well, because you first hear about it, and most people are like, well, this just sounds like some made-up internet money. It doesn't seem real. And then you start to go down the rabbit hole, and you learn about it, the impact and how people use it. And then I think your opinions change. And I think it's very hard to get people from that first point of knowing very little to actually really understanding a lot about Bitcoin.
Well-
And you have to do that with a lot of people, I imagine.
Yeah, we do. I mean, I think it's important for regulators to not impose, value-based decisions on assets, especially market regulators. I think it's the job of market regulators to abide by their mandate of market integrity, and to the extent they have the mandate, customer protection. But I don't view that it's the regulator's job to tell investors what to buy or why they should or shouldn't buy certain things. I think that's the market's job. But me personally, I mean, I've always said there can be a very strong debate about what the value of Bitcoin is, but to me, it is unquestionably worth something. That to be able to cryptographically prove that a digital item has unique ownership, it is valuable.
Well, it's worth $9,809 as of now.
That's right.
That's what people are willing to pay for it.
That's right. Well, and even when the price was much lower than that, and there were plenty of folks that were saying, "See, we told you so." I mean, my response to that was, "What did you say?" Because it's still worth $3,000.
Yeah.
I mean, name another commodity in our space that's worth $3,000.
That was worth $1 9 years ago.
It's exactly right.
Yeah.
That's exactly right.
And it's a period of adjustment as well, because it's like nothing we've ever had before. And it's taking some time. It's taking some adjustment. Also, even though it has a lot of liquidity, compared to other markets, it doesn't have enough liquidity to get the price a little more stable. But it's a real shift in the way people think about money and think about assets. Like I said, we've not had any decentralized form of money which nobody can control to a certain extent before. So I think it's a period of adjustment.
Well, and that's an interesting point, and I think in this day and age where we're so used to gaining instantaneous information, I think our degrees of patience have shortened, and we're all becoming a little bit more impatient for success.
Safety. Have you read Safety's book, The Bitcoin Standard?
No, I haven't.
So he talks about we have a low time preference.
Yeah, I think that's true. But you look back across history, especially in the markets that the CFTC regulates, and there are contracts that trade now on Eurodollar futures, Treasury interest rates, the S&P 500. They didn't start trading with the volumes they have now. They started trading with very little liquidity. They grew over time. They grew with retail and institutional adoption. And now they are, standards of the most liquid contracts in the world. And I think there are as many people that know about Bitcoin as probably know about a lot of those other types of products. I mean, you don't have a branding problem.
Nope. I mean, I was in Norway recently. Have you been to Norway?
I have.
So that was my first trip. I went to Oslo. I loved it.
It's beautiful.
Instantly fell in love. Everything works perfectly.
Yeah.
And I was at the Oslo Freedom Forum, and I had a panel about Bitcoin around the world, and I asked people to put up their hand if they'd not heard of Bitcoin. And I know it's not a Bitcoin conference, but it's an audience that certainly should be engaged and heard of it. Not one hand went up. Not a single hand went up. And then when I asked who owns some Bitcoin, half of the hands in the room went up.
Mm-hmm.
There isn't, like you say, there isn't a branding problem. I think there's a broader education problem, but that comes.
Well, of course. I mean, I think, and that's important because you want people to do that on their own. You want people to be informed about their investment decisions, and I think that's a good challenge to have. As I think about Bitcoin and other forms of payments, which isn't to try to limit what I think Bitcoin is, but you look at credit card companies. Their biggest expenses are on branding and on fraud, marketing and fraud. Well, you don't have the branding issues around Bitcoin, and you have a pretty robust anti-fraud detection system with the decentralized nature of the verification process.
Well, not a single fake Bitcoin has ever been created.
Exactly right.
Yeah. So let's talk a little bit about the CFTC and the intersection with Bitcoin, because this is useful. You've listened to my shows. I always want people to understand the basics. So can you start by telling me about the CFTC, its history, and can you also use your Trading Places analogy, which you told me before, which I loved, because I love that film. It's a film I grew up on.
I know. Well, it'll give us a chance to maybe remind a whole new generation of that film, go back and enjoy a classic.
Yeah.
But
for the dollar bet.
For the dollar bet. We'll have to go offline at some point. It's actually, there's a true story that film is based upon.
Oh, really? Well, I tell you something that's come off the back of that. It's quite funny. So my brother has made a similar bet with me about my podcasting career. So he said, you seem to get an interview you want. So he's bet me £10 I can't get an interview with Tom Cruise.
Oh, really?
Yeah. It'll probably cost me, as a journey, flying around the world doing it, tens of thousands to do it to win £10.
Well, I'd take your side of the bet there.
Yeah, I think I'm going to do it. I'm going to get it.
I think you're on your way. Yeah.
Do you know him?
No, he hasn't come through the CFTC anytime. No.
I'd give you £5 if you could.
The movie Trading Places, there's a classic scene at the end where they're actually on the trading floor trading futures and options on frozen concentrated orange juice. And there's a crop report that comes out. People think that they're cornering the market because the crop report's going to be good. Turns out being bad, prices sink. But those are the markets that we regulate. We regulate markets that are derivatives on commodities. And those derivatives were traditionally futures contracts. They were setting a price to be paid for the future delivery of a commodity at a certain point in time. And that commodity had to be a specific grade and delivered to a specific location. The history of futures, what are actually broadly referred to as forward contracts, date back 8,000 years to the Sumerians. Mm-hmm. They first used kind of a system of jugs with actual tokens to represent what they were growing or what they were selling, and then they would trade their tokens back and forth, and then at the time that they were supposed to be delivered, they would make good by delivering their commodity against the holders of those tokens. Even in the 1500s, when spices were in such a large demand, especially in Europe, salt, pepper, and other spices, there would be ships that would be chartered to travel around the world in search of salt. Well, you weren't going to spend all that expense and the risk of sinking in weather or being attacked by pirates if you didn't know exactly what price you were going to get for the salt. So there were a lot of forward contracts put on salt to incentivize the exploration and production of salt. And you come forward to the United States in the 1800s, the center of kind of the commodity markets became Chicago in the Midwest as the home of farms and agriculture. And the Chicago Board of Trade was originally formed in 1848 as a spot market for the exchange of corn and wheat. But almost immediately, there were forward contracts for the future delivery of those products too. The ancestor agencies of the CFTC came about in the 1920s to try to establish a regulatory structure and have a view on speculation in those markets. But it wasn't until 1975 when the CFTC itself was formed, and it has existed in that state since.
And it's really the role of the investor to take on the risk for futures contracts. And they have the opportunity, I guess, do they have the expertise to, within each, I guess there's different markets, within each market to analyze what's going to happen and create their own risk profile? So it saves, I always think of the example of the farmer. The farmer doesn't want to have the risk of a bad crop. So they take on the risk for the farmer, and the farmer has a lower yield because of that.
So what I describe these markets as are risk transfer markets or hedging markets. They allow the farmer to gain certainty over price and transfer that price uncertainty to someone else who's more willing and able to bear it. Sometimes that's a bank, it's an investment firm, or it's an individual speculator, or maybe it's a consumer. Maybe it's the purchaser, but rarely does the producer and the purchaser of the same commodity meet at the same time in the marketplaces at the same price. There's a vital role for speculators and intermediaries to play to try to take the other side of those trades, try to distribute them through their network of other clients. In a risk-appropriate way that links both the demand of each party as well as the time difference of each party.
Right, and so with Bitcoin, I guess the futures contracts are great for the miners. Yeah.
I think I think that's a really interesting point. Actually, it's not something I've thought much about, but I think it helps. It could help to lock in some level of a mining premium. I think there's there are really interesting dynamics when you get into Bitcoin futures contracts. There are interesting dynamics from a potential manipulation perspective, and there are interesting aspects from a custodial perspective that we haven't necessarily dealt with before. There's been a lot of discussion in the regulatory sphere and in the political sphere around the potential manipulation of Bitcoin prices on certain platforms, or globally, or at least maybe even an uncertainty as to the validity of any given price. The way that the CME Bitcoin futures contracts are settled is they're settled against an index of prices over an hour window. That hour window, and those prices are across multiple exchanges. That hour window is broken up into 5-minute increments, and then there's a volume-weighted average price across all those exchanges in each 5-minute increment. So could someone have enough resources to go out to every exchange and place enough trades where they volume-weighted impact the price in each of those 5-minute increments? Maybe. Would we know about it? Absolutely. So The point of that is that I think there are mathematical ways to help ensure the integrity of a settlement index and therefore a futures contract that doesn't necessarily have to rely on any individual platform being completely immune from manipulation.
And it's within the interest of the exchanges to work together to share information.
I believe it is.
Yeah.
We have a really interesting landscape in terms of the regulatory structure in the United States. The SEC regulates securities and regulates security-based derivatives, individual or narrowly tailored security-based derivatives, and the CFTC regulates commodity-based derivatives. We also have very limited jurisdiction over the commodity spot market itself. If you kind of think of what regulatory powers actually mean, I divide them up into oversight powers and enforcement powers. Oversight powers are kind of preemptive. They set capital standards, they set disclosure obligations, record-keeping obligations, codes of conduct, things that we could go out and examine a registrant and hold them accountable for. And then there are the enforcement powers, where we can come in after the fact and say, you've committed fraud, we're going to take you to court.
Is that on generally an individual level? You're looking for somebody who is actively trying to manipulate the market?
Well, so it could be an individual level, or it can be an entity if there are individuals in that entity that are engaged in that activity. We do both. But the point of that bifurcated set of powers is that the CFTC only has enforcement powers over the spot commodity market, where the actual transactions of commodities, not derivatives, the actual transactions of commodities. We only have after the fact fraud enforcement powers. And we actually just brought and finalized a case this last week where there was someone that stole basically $147 million of people that wanted to invest in Bitcoin. That would be kind of a spot market type of transaction, or a spot market-based commodity pool. And we have the enforcement capabilities to go and prosecute that individual. So we don't have the oversight powers over the spot exchanges, the spot platforms. Exchange means something in particular. It means a registered entity with the government that are held to certain standards. That's why I always call the online platforms as opposed to exchanges, because they aren't registered with the federal government. They do have money transmitter licenses, but they are not held to the standards of national exchanges. And I've actually called for those platforms to get together and develop some type of self-regulatory structure.
I saw that, yeah. So you don't think there should be more formal oversight?
I think that's a different question. That's really a decision for the policymakers in Congress. They would actually have to take a proactive step and introduce and finalize new legislation to give a federal agency those types of powers. I think my point in calling for that type of self-regulation was that in the absence of any agency getting those powers, this would be a market benefit, and I think it would be helpful if I, as a regulator, helped to push everyone towards that conversation. And I think there's been some progress there.
I mean, I certainly agree there should be more cooperation. It's just within the interest of these exchanges / platforms to work together, because Bitcoin does have a tainted image as well, and it's within the interest of the exchanges to try and get rid of that. So I kind of agree with you, but then I sometimes think without formal oversight, is there really always the incentive?
Well, I think the incentives are hard, right? The incentives of potential increased trading and increased liquidity because you have a market with integrity, can feel like it competes against the existing dynamics of the marketplace and the ability to make money off of an unregulated, an unfederally regulated structure. I've maintained that the reason you've seen such a growth in in nationally regulated futures, derivatives, and stock securities exchanges is because they have developed markets with integrity. They have levels of federal oversight that have promoted that. The idea of trying to achieve higher standards for market integrity, I think, is an additive, and it's in everyone's interest, even though if in the short term it may feel like it's giving something up.
I guess also more formal oversight is kind of, in some ways, it's kind of antithetical to Bitcoin, because Bitcoin is about less government, less control, less power in some ways.
So I mean, I think that there are we do have, as a regulator, I value that, but I think we also have an obligation to treat things similarly and fairly. Otherwise, we end up picking winners and losers, and I don't want to be in that business. So I think that just like we have federal government standards for money laundering and know your customer, I think we have to apply those standards to entities that are willing to transact things for dollars. And I think that that's an appropriate use of the federal government's authority. But if Congress and the president, in signing any legislation, were to give an agency more oversight powers over platforms, I wouldn't necessarily think that affects Bitcoin itself. I think it affects the trading environment of Bitcoin, and helping to either legitimize further or provide more security or transparency around the environments in which a retail market participant can access Bitcoin.
Next up, I talked to Brian more about how the CFTC considers cryptocurrencies, but before that, I've got a message from my show sponsors. So first up, Dropbit, without doubt the best mobile Bitcoin wallet I've used. Have you downloaded it yet? Have you tried it out? They've got this super cool new feature which allows you to tweet Bitcoin to people, and that's on top of everything else they've done with the product. I've got a really great relationship with the team. They are welcome to feedback. We talk pretty much every week, and I'm going to be meeting up with them in San Francisco to talk about what's coming up soon for them. But definitely you should go and check it out. Go and download the wallet. It is like a Venmo for Bitcoin. They've made it super easy for sending Bitcoin and receiving it. You can use your phone number. You can use standard wallets addresses. And as I said, you can tweet Bitcoin to people. It's super cool. Go and check it out. The UX is amazing. It's available for Android and iPhone. Just head over to dropbit.app, which is dropbit.app. That is dropbit.app, which is dropbit.app. Lastly, but definitely not least, I want to tell you about my new sponsor, Accounting. Right, your taxes. You can't muck around with this, especially if Bitcoin's going up. If you're making some money, you definitely need to get your tax affairs in order. I've been playing around with the tool, and I love it. I love how easy it is to use. It's one of the best UX products I have used, without doubt. They make it so simple for setting up, for linking your exchange accounts and your wallets, but it doesn't just calculate your tax. It also optimizes your trading decisions to ensure you pay the lowest tax possible. I highly recommend you check it out. You only have to pay at the point when you want your tax report, and they are the cheapest, best price product on the market. So you've got amazing UX, low price, optimized trades, and a great tax report. It's an absolute no-brainer for you to go and check it out. So head over to accointing.com, which is accointing.com. That is accointing.com, which is accointing.com. What powers do you have, and what's the full extent of the penalties you can impose on people? Is it prison, or is it just financial penalties?
Yeah, no. We don't have criminal authority.
Okay.
But oftentimes, if we're investigating something that is significant, we will refer it to our Department of Justice.
Okay.
And the Department of Justice will prosecute criminally, and if that person is or entity is found guilty, the appropriate consequences could involve jail time.
Yeah, 147 million sounds serious.
Well, if we ever find that person,
right,
then yes, I think that they and the Department of Justice are going to have a relationship.
Well, you've got your whistleblower campaign.
We do. And the whistleblower campaign is great. Oh, you have one
I
of
got
our
my
own
whistles. I got
Yeah.
this at Consensus.
Yeah. So that
I thought it was brilliant, by the way.
Yeah, that team does a great job, and I think it's a great program. It's a not a very well understood program that there are significant potential financial rewards for legitimate whistleblower activity. I think it's up to 20% of recovered funds can go to a whistleblower, and we have given out individual whistleblower awards in the tens of millions of dollars because they have been invaluable to contributing to a significant fraud investigation.
Okay.
So
these aren't small amounts of money.
they're not small amounts of money, but they relate to the size of the fraud. Obviously, you're not going to get a $20 million award for someone that stole $20,000. But we want to incentivize people coming to us and reporting what they think are frauds or what they think are is bad behavior. Doesn't mean that everything people report is legitimate. Doesn't mean that everybody that reports something is going to earn the largest whistleblower award, but it helps us in terms of our information flow and our ability to be aware of market dynamics. We're a small agency. We have 750 people. We have a $250 million budget. The SEC has thousands of people, and they have a $4 billion budget. Okay. And we have jurisdiction over a $400 trillion derivatives market, let alone what people would consider the size of the fraud in the spot commodity markets.
So there's a lot to do.
So we'll take all the help we can get.
And so you, as you mentioned earlier, you sponsor the Technology Advisory Committee at the CFTC. And what I've noticed in that is that you are covering topics outside of Bitcoin. You are also considering smart contract platforms. Yeah. So obviously you're considering other cryptocurrencies. And you will be aware in the space that there is this view that there are people who are Bitcoin maximalists who believe Bitcoin is the only thing and everything else is nonsense. But there are other people who believe in other cryptocurrencies. I guess you guys can't really take an opinion on that because that would be, as you say, selecting winners and losers. You have to let the market operate and treat every cryptocurrency the same?
I don't think we want to make value judgments on any potential commodity or asset. But what it's incumbent upon us to do is to understand the dynamics of those commodities in considering exchanges listing derivatives contracts on them. So, if someone wants to come to us with a derivatives contract on XYZ cryptocurrency, we really want to make sure we understand, how that's mined, how it's verified, what the dynamics are, how liquid it is, where it trades.
Do you know that there is actually an XYZ cryptocurrency?
No, I didn't know that.
There's a ticker. I think it might be Tezos.
Oh, really?
I'll have to check.
Okay. Well, what letter should I use?
I don't know because it's probably something for everything.
MNO, something.
Yeah, I don't know.
Okay. Well, I didn't mean to reference that. Thank you for informing me. You should come to talk to the Technology Advisory Committee.
Yeah.
But it's been engaged in a wide variety of presentations. We heard Peter Van Valkenburg give us a great presentation on really just the basics of the difference between proof of work and proof of stake. Yeah. And it's probably something that the folks that are heavily involved in Bitcoin and other cryptocurrencies know a lot about. It's something that was really useful for us to hear.
Did it click for you straight away? Because some of it's mind-boggling to get your head around. Yeah. The different consensus mechanisms. Yeah,
it did click because I think Peter's very talented and very knowledgeable, and he's got a great way of distilling that information into a very usable and approachable format.
He's tough to debate against.
I wouldn't do it.
I moderated a debate between him and, do you know Angela Walsh?
No.
She's she's a lawyer. She wrote a paper about developer liabilities. Should they be considered as I can't remember the term. I don't know why I can't remember it off the top of my head. But I moderated a debate with them in New York. I've got to publish it actually. I would not debate Peter.
No, Peter's great. It was interesting you mentioned that because I've done some work with Coin Center on my own views around the liabilities in this space, because it's something we are dealing with and are going to be dealing with more and more and more.
I read your article on their website.
Yeah, and that article was basically in response to a speech I gave in Dubai, where I had really tried to think about, all of the different parties involved in the space that could, that could potentially violate our rules, and whether or not what the standards were for that. And I used some language that I regret using in terms of a liability standard that I didn't mean, and that was way too loose. And I talked a lot about it with the Coin Center folks, and I was really pleased they gave me an opportunity and a platform to further detail some of that in a way that I think really gets to the idea of intent.
Because Peter's concern is that it would be a blow for innovation and freedom of speech.
Well, absolutely.
Yeah.
Yeah, and I mean, if you're going to hold a developer liable for any potential illegal use of whatever they produce, that's not what I believe, and I think that would be detrimental to any innovation or any industry. And I think it really gets to, I think we need to have a high bar when we charge someone with illegal conduct. And I think that high bar needs to have a level of intent associated with it if the person themselves wasn't actually committing the violation.
Yeah. I think it goes back to, I quote you here from one of your articles, but I think that just goes back towards what you said. You need a robust, pro-innovation, do-no-harm posture. And it seems that you're echoing that.
Well, I would hate to ever see a regulator, let alone the CFTC, through a lack of action or through an affirmative action, preclude the development of innovation and technology. And there are some things that I think, I'm seeing across the regulatory space, and even a few things within the CFTC where I fear for that. But I really think it's incumbent upon regulators to take a high bar to prosecuting our rules, to ensure that really only the people that did something wrong are being held accountable, and that the folks that want to take a risk can take a risk. I'm not against people taking a risk. I'm not against people losing money. I think that's a part of every market and every entrepreneur. And
it's an education.
It's an education.
Yeah.
It's a great way to learn.
Yeah.
And if the federal government is trying to get in the business of preventing people from losing money, we're going to preclude an enormous amount of innovation and future efficiency.
But investor accreditation rules do preclude people from losing money.
Well, I think they preclude people from losing money in certain ways.
Yeah.
Yeah, I agree with you, and I think those are things to look at. Although it is also interesting. There's kind of a sweet spot in the frauds that we see in terms of the amount of assets that individuals invest. There are very few cases where we're prosecuting someone for raising $100,000 off of 10,000 people. We're prosecuting people that raised $50 million off of 100 people. $20 million off of 200 people. Where you do the average investment per investor, and it is a significant sum of money, which to me means that, if we are going to have an idea of a sophisticated investor, what does that mean? And are our thresholds appropriate? Or do we go in the opposite direction and say, by having levels of, somewhat arbitrary levels of determining sophistication just by a blunt red line test of assets, are we precluding people from gaining access to very, very profitable investment strategies that correspond to a lower risk profile? And in many cases, I think that's been exhibited. And we don't necessarily see people with higher assets not being scammed. So I think there's a really good debate there, but I don't think you're ever going to get it right.
No. How much do you work with the SEC How much coordination is there? And are there cases where enforcement is required and the jurisdiction is unclear, or is it always very clear? Is there a very clear separation between what is a security and what is a futures contract?
Well, so yeah, you bring up a really interesting point, and I think it's something that a lot of folks have become familiar with recently, which is the SEC, which is the Howey test from the Howey Supreme Court case in the 1930s, and what really makes something an investment contract, and that's really come to bear on this space, where there's been a tremendous amount of innovation and activity with the new design of different types of tokens that represent different things. And so if we're bringing a case where there's outright fraud for the solicitation of something, someone's creating or saying they're going to create their new crypto asset, but they steal all that money. If that crypto asset would have been a security, it would probably be in the SEC's jurisdiction. If that crypto asset would have been a commodity, it's probably in our jurisdiction. So we want to have discussions there to make sure that we're doing it together. If their line is too blurry, or if it's clearly in one space or the other, the right agency is leading that. But the CFTC also is a little bit bound by our ability to affirmatively engage in that definitional space, because essentially under our statute, under law, everything's a commodity. And the SEC regulates security commodities.
Okay.
Does that make sense?
Yeah, I do.
So we don't have to make an affirmative decision about something being a commodity, but they have to kind of make a affirmative decision about something being a security commodity that then they would ultimately regulate, that would have to be traded on a securities exchange. I'm not a lawyer, as I said, but I kind of have my own views on the Howey test, and I think that there's some really interesting questions about whether or not something that was received in exchange for an investment contract itself is a security. The Howey test was based off of orange groves in Florida, but it was investors buying land, but then they hired the Howey Corporation to manage that land, pick the oranges, process it, sell it, and then the Howey Corporation distributed on a pooled basis those profits to their investors. I think that's a really, more, if we were to look at that now, I think that would be more towards an extreme of what is considered a security than what's more in the middle. I think what we're talking about now would be scenarios where someone bought the land and they hired the corporation to pick the oranges and send them to them. And if that were the case, would that have been an investment contract? I'm not sure. Would the oranges have been securities? I'm not sure they would have been.
But similar to investor accreditation regulations, these laws seem to be quite old now and quite outdated. Times have changed. We had a little chat with Christopher Giancarlo beforehand, and he talks about, he struggled to get his relatives, his nieces, nephews, children interested in the stock market, but Bitcoin they know, they love it and they understand. So do you have that feeling that there needs to be a review of the regulations, or do you think the regulations are still right within the CFTC?
Well, so the Howey test was a Supreme Court case, and the Supreme Court decision laid out some principles, right? And it's the interpretation of those principles that I think everyone is discussing. Has the interpretation of those principles been appropriate, overreached, underreached, provided certainty, allowed for flexibility? And I think, you can't say that something that's lasted for 80 or 90 years hasn't really worked, because I think if it's principles based, it stood some of that test of time. But with as with anything, there's always the chance for a lawsuit to get back to that level and allow whoever's sitting at the Supreme Court to reconsider that if they don't think it's a good standard. Otherwise, until that happens, we have the Howey test, and the SEC has a lot of expertise in trying to administer it.
Yeah. I tell you one of the things that was interesting over the last week, and with regards to Facebook Libra coin, because one of the things that I found very interesting, I mentioned to you beforehand with Bitcoin, is it's very hard to control Bitcoin. You know, it is decentralized. Yet my dealings with yourself, with Hester, with various regulators in the US, it seems the US is actually still quite pro-Bitcoin, pro-innovation. And I guess one of the fears is if you try and ban it, this innovation will go to other markets, which I understand. But at the same time, what was quite interesting in the last week is the House Financial Services Committee Chairwoman Maxine Waters called for Facebook to halt development, and now the Senate Committee on Banking, Housing and Urban Affairs has scheduled a hearing to cover both Libra and Calibra and privacy issues. You can't do that with Bitcoin. You can't call a hearing because there's no one to call. You can have a hearing and have someone like Peter Van Valkenburg and Nouriel Roubini debate it. But you can't really do anything about that. But you can regulate Facebook. And, you know, it's not really even a question. It's more of an observation of the differences of things that you as regulators having to deal with when you've got something centralized versus something decentralized.
I mean, I think there's always an interest by people. In whatever profession they're in, regulatory, legal, media, to try to lump things together. But the fact of the matter is there's a huge diversification of innovation in the space, with pure decentralization at one end, and then kind of a centralized token at the other. And that other extreme may sound innovative, and it could have a potential global reach given Facebook's presence around the world, but to me they are incredibly different things. But I mean, I think what you've seen is exactly what you said, which is the limits of government capabilities over the regulation of something that's decentralized, because there is no entity to regulate, versus the government's power to regulate something that is centralized, that's associated with an entity that is existing right now in a very charged political environment. It's interesting that they decided to do that now, given the political environment in which they themselves are operating. But with anything, I think we would look to the underlying features. If something like that ended up trading and some exchange wanted to list a futures contract or a derivatives contract on it, we wouldn't take a value judgment on it. We wouldn't say it's better or worse than any other type of product. We would look to see what is the contract settling against, or if it's physically settled through the exchange of the underlying token, how is that token delivered to finalize that contract, to settle that contract. It's all the rage to talk about what that's going to turn into or what its involvement is. I mean, I think from the press releases that have come out from both the House and the Senate side, to me, what it speaks to is an increased appetite to form a regulatory regime around crypto products. And we'll see if that evolves, and if so, how. If it evolves more from that centralized side of regulating the entities that are promoting centralized-based products, or if it is comprehensive around all things, and how that would work.
It presents a real headache for people, the Facebook Libra coin, I think. But I was also surprised at the reaction from Chairwoman Maxine Waters, because I'd made the assumption, and maybe that's incorrect, but I'd made the assumption if Facebook were considering creating a global currency, of which they are, I know the foundation is registered in Switzerland, but they are a US-based company. My assumption is they would have already had the high-level conversations within government.
Well, I haven't met with them.
Yeah.
That doesn't mean they haven't been in the building, because I don't know whether or not they have, but I haven't met with them. I would assume that they have had some conversations, but I did read part of the white paper, and their portion on compliance with a global regulatory financial complex is a page and a half long.
Yeah.
I think they might need a little more than that in terms of the regulatory regime that currently exists, let alone the one that may or may not be created if they launch that product.
Do you have an opinion on what's going to happen with it next?
No, it's too. I think the questions and the environment of those hearings on the Hill will be illustrative of where I think maybe legislation could go. I mean, I'm not sure, without legislation, anyone has the power to specifically stop something, but obviously, if someone asks for something to be stopped and you go forward, you're picking a fight.
Yeah.
And that would have to be, that entity's decision.
Something else I saw you talk about and that I thought was quite interesting was zero-knowledge proofs.
Yeah.
In that, obviously, they cause significant problems with AML regulations, but at the same time, as you noted, it's fascinating technology. How do you think... I struggle to see how any government department would accept any form of privacy coin which can't be tracked. I think it's why we've never seen Monero on Coinbase. We see Zcash, but they don't allow for the shielded transactions. I guess this is one of the scariest and biggest headaches because I was speaking with Caitlin Long recently about Facebook and the new FinCEN regulations where they said it only costs up to $600 for someone to create a vest and buy the right equipment to cause some kind of terrorist activity that could kill hundreds of people. Any form of privacy currency which allows you to not track who it is, or where it is, or what's happening with it, must be a huge headache for government.
Well, I mean, this is wading pretty far outside of our own little siloed regulatory regime. But I mean, I think you go to the heart of a debate that's been present in the United States significantly over the last 15 to 20 years, which is the line between civil liberties and public protection. How do you allow for freedom while allowing the government to try to do its job to protect the population? And I think that there has to be a balance there, and I think the government is. I see the government trying to find that balance. I think things like zero knowledge proofs push that balance one way, and there may have to be a recalibration of where that line is. But I think the underlying technology could be really interesting to us because one of, and I don't know very much about it, and something I would like the TAC for the Technology Advisory Committee to further explore. And if I have individual time, maybe do it myself. But we ask our registrants, our regulated entities, to send us a tremendous amount of data, and it's data that is highly confidential, very valuable, extremely proprietary. And I think we do a very good job of protecting that data, but it would be difficult for me to say that it is completely immune from any danger. I don't think anybody could ever give that type of assurance in the world in which we're living. But I'm fascinated by some of the initial conversations I've had around that technology, whether or not it could apply to the transmission of highly sensitive data from a government perspective, whether or not we could use it to validate that an entity is holding that data itself and not changing it. And therefore, when we need it, we can access it because we know it's there and it hasn't been altered. I think that's a really interesting, maybe offshoot of that technological construct that isn't necessarily involved at all with the crypto asset side of it. Maybe people know a lot more about that than I do and would immediately dismiss it because it's not the right use case. But from the little I know about it, I think there could be some fascinating outgrowths there.
I don't think you would struggle to get someone to come here and talk to you about it. I think people would come with open arms and love to talk to you about it.
Well, it's a big deal. We regulate multi-billion-dollar asset managers and private funds, and their intellectual property is sacred, and I think that they worry consistently, not because they don't have confidence in the CFTC, but just because they know the environment in which we live. That it's at risk.
Do you find the space exciting?
I find it fascinating.
Yeah.
I thought, Chris and I were talking about this a while ago. When I was originally preparing for my confirmation hearings, I had to go and testify in front of the Senate committee that oversees our agency twice, when I was being considered as a nominee. And when I was preparing for that testimony, first in 2016 and then again in 2017, I didn't do any preparatory work on crypto assets or cryptocurrencies because it wasn't really something that people were associating with our space. And now, I think because of Bitcoin futures contracts and because of Chris Giancarlo's leadership and because of the positioning of the CFTC with its lab CFTC arm that has been very proactively engaging in technologists and innovators, especially in the crypto asset and DLT space, we're at the forefront of that. And I think it's enormously exciting, but it feels like I'm drinking from 4 fire hoses instead of just the one that I thought I was going to be drinking from.
Is it coming up in a lot of conversations?
Oh, yeah. Yeah. I think, but again, I think our role is somewhat limited in that we don't necessarily have to be involved in what is in further legitimizing or adding to the market integrity of the spot transactions of crypto assets. That's for now for the private market to figure out. But we do get involved when an exchange wants to list a derivative on one of those assets, and then we need to be diving headfirst into it. And I think we've been doing a lot of groundwork in terms of trying to get up to speed on a lot of the different landscapes, but it really comes to a head when there's a platform, there's a regulated exchange, what we call a DCM, that wants to come forward and list that contract. And we did that with Bitcoin, and we're doing it with a few others right now.
And Christopher has got 3 weeks left now, 3 steps down.
That's right. Yeah. July 12th will be his last day.
What's it like been working with him? Because obviously, us people in the Bitcoin space are a huge fan of his. As I said earlier, his Senate testimony was fantastic.
Well,
it was forward thinking.
I think he is such an open-minded person, but that also has, in my view, just an incredibly brilliant way of thinking at a high level and at a deep level and describing both of those to you in straightforward terms. I'm not surprised at all that he said what he said at the Senate hearing with such eloquence, and it was received with such open arms by the community that really cares about this innovation. And I see that every day in all aspects of what we do. And we deal with an enormously diverse marketplace. Agricultural contracts, energy contracts, metal contracts, financial contracts, the entire global swaps market of interest rates, credit default swaps. The markets are global, they're local, they affect every industry and all the parts of the economy. And there are always issues there for us to consider and think about and potentially have to address with our fellow regulators or with folks on the Hill. And he's probably the most thoughtful person I've ever met and gotten a chance to learn from.
Very friendly as well, very approachable.
The best attribute. Yeah, always interested in meeting people, always interested in learning, always interested in sharing his views in a way that's not confrontational, and certainly doesn't assume that you have to agree with him. It's just been a joy to be able to be here while he's been here.
Great. All right, well, this has been fantastic. And I just want to say thank you again for allowing me to come here. I've really, really appreciated how all the different regulators I've met have been so open-minded to coming on and being on my podcast. So I firstly thank you for that. And as we close up, do you have any final thoughts? And how do people keep an eye on the work that you're doing at the CFTC? do you want people to get in touch with you directly or not? If so, how do people stay in touch with you?
Yeah, well, thank you, Peter. First of all, I applaud you for wanting to do your podcast in person. I think it really adds to the conversation to have you here. So I compliment you for taking the expense and doing it. And it's great to sit down with you. And I know Hester is applauding in her mind at your control over your language. So good job.
I have not sworn once.
You have not. Good job. Don't ruin it now.
Right? I'm going to go outside. I'll be recording and I'll be like...
That's right. So, and to your point about regulators sharing their views, I have a tremendous respect for accountability in these positions. I believe everybody needs to be held accountable for their views and for their decisions. And you taking this role on and wanting to engage with regulators, I think adds to that public dialogue and adds to that level of accountability. So I compliment you on that. But this is just it's a privilege to be in this position and to be able to think about these things. And I don't want anyone to ever think that I've closed my mind or have made my mind up or I'm not going to change my view if I'm confronted with a different perspective or new information. So the first thing I would say is that I try to be very accessible. I don't think I've ever turned down a meeting request that has come into our office. All of our speeches, testimonies, statements are posted online on the CFTC's website. There is a lot of information there. I mean, it's amazing how much information is available everywhere you look. But if you really want to learn about what any of the commissioners think about specific topics or about what the CFTC is doing or currently working on, our website's a great resource. We have 5 different advisory committees, 4 other ones besides the Technology Advisory Committee. All of their meetings are webcast live, and they are archived on the website, and the presentations are put up as well. So if anyone has an interest in seeing Peter Van Valkenburg's presentation, they can go watch it on our website or look up his presentation or anything else that we're working on. And I'm happy to solicit ideas for future meetings or future points of discussion. And I just really hope that I continue to learn about this space and we can continue to have conversations and that you'll see the CFTC expand into monitoring new contracts on new digital assets, and we'll see the integrity of the spot markets continue to grow and I think continue on the trajectory that we've already seen.
Great. Well, listen, thank you for everything you've done, and again, appreciate you allowing me to come here and do this.
Yeah, thanks a lot, Peter.
Okay, so what did you make of that? Did you enjoy that interview with Brian? I've got to say, I really enjoyed that myself. It was a really refreshing and enjoyable conversation. Brian's really open-minded, and similar to my interview with Hester, I just really appreciate how open the regulators are to talking to me and coming on the podcast. It really is great for what I'm trying to do here. And to be honest, while we might all wish for minimal or no regulations with Bitcoin, it's kind of inevitable that there will be some. And to me, Brian comes across as the sort of regulator I'd want to be in the commissioner role. He's open-minded to the industry. He seems genuinely interested and open-minded to innovation and meeting up with people. It was pretty cool when he said he's never turned down a meeting request. So that's cool. He wants to learn about the industry. And yeah, I really enjoyed it. And another thing that kind of really surprised me is when we chatted about privacy coins. It seems like even there's this huge challenge of regulating these types of coins, probably near impossible. We've never seen Monero on Coinbase, and with Zcash, we've only ever had those non-shielded transactions. It was still cool to see that Brian was looking into the innovation and seeing a potential use case for zero-knowledge proofs within the CFTC. So yeah, that was really cool, and hopefully, Hester, if you're listening, you'll be happy with me. I made it through the whole show without swearing once. So thanks for the warning on that. And yeah, I'm really looking forward to getting out and interviewing Christopher Giancarlo in the future. And just want to say thanks to everyone at the CFTC and the SEC for being open-minded and letting me come and talk to them. If you do have any comments about the show, if you want to reach out to me, you can email me on hello@whatbitcoindid.com. Also, I just want to say a massive thanks to everyone who supports the show. It means so much to me. I've got so many plans for the future. I can't even believe it. We're coming up to 2 years of the show as well in November. But look, a massive thanks to everyone who supports the show, whatever you've done. If you haven't done anything and you enjoy the show and you want to support it, there are so many things you can do. It's all on my website, but here's a quick reminder. Firstly, you can just listen to the ads. I know people find them annoying, but really, as you heard in the interview with Brian, he appreciated me coming out to see him, and there's definitely a better interview doing them in person, and I get to do this because I have the sponsor. So please give them a listen, check out their products. It's super helpful. If you don't want to listen to the ads, you can sign up at patreon.com to have an ad-free version. I've got 99 patrons now, which is really cool. Big love to everyone who's done that so far. But if you're interested in doing that, it's patreon.com/whatbitcoin did. If you don't want to use Patreon and you do want to subscribe to the ad-free version, you can subscribe with crypto. 11 people have done that now. Just drop me an email. I'll give you a deposit address and add you to the distribution list. And I can also accept Lightning payments. You can become a show sponsor. All my ads are sold out for the year, but I can find ways of squeezing other ads in. And I'm also interested in finding out who wants to work with me next year. Just get in touch. We'll figure out something there. You can leave me a review on iTunes, or you can click on the subscribe button. Both help with the reach of the show. You can follow me on social media. I'm on Twitter. I'm on Instagram. I'm on Medium. I'm at What Bitcoin Did on everything, but I do have a personal Twitter, which is at Peter McCormack. DMs are open, so feel free to reach out to me if you haven't got anything that's nonsense to say. Also, check out my website. That's whatbitcoindid.com. I do want to do a bunch more with that in the future. I've just been so busy recently, but I will try and do some more things with that, get some cool content up there. You can sign up to my newsletter, find out when the latest shows are available. You can do that on my website, and you can share the show out with your friends and family. Okay, so it's Bitcoin 2019 tomorrow. I'm going to be emceeing that alongside the amazing Naomi Brockwell, so that's going to be super cool. Friday, I've got my interview with Charlie Shrem coming out. It's a pretty deep one. It's all about his prison sentence and what happened there. So if you're interested in that, that will be out on Friday. And remember, if you want to reach out to me, my email address is hello@whatbitcoindid.com.